Federal Case File 6612 MN, declassified. The events on record begin on a Tuesday morning in the spring of 2021, when an IRS Criminal Investigation analyst named Dina Marsh sat down at her workstation in the agency's Manhattan field office on Church Street and began running routine transaction surveillance reports on businesses in the West 47th Street corridor, the dense stretch of jewelers, traders, and brokers that New York has called the Diamond District for the better part of a century. Marsh was 34 years old, 3 years into her post in the Financial Crimes Unit. She was not looking for anything in particular. The report she pulled was an automated Bank Secrecy Act flag aggregation that her unit ran on a rotating quarterly basis. She expected, as she usually did, to find a handful of minor reporting discrepancies, a few borderline structuring patterns, nothing that required more than a form letter. What she found instead was a small storefront trading company called Oriente Metals and Exchange LLC, operating out of a fifth-floor suite on West 47th that had logged $19 million in scrap gold purchase transactions in a single calendar quarter. Purchases documented by invoices, weight receipts, and wire confirmations, but had no corresponding sales records to any licensed refiner in the state of New York that could account for more than $4 million of outbound product in the same period. The case file notes that Marsh flagged this discrepancy at 10:17 in the morning and sent a preliminary query to her supervising agent before noon. By the end of the business day, that query had been escalated to the Financial Crimes Enforcement Unit and forwarded to Homeland Security investigations. What Marsh had found, the affidavit later stated, was the entry point into one of the most sophisticated trade-based money laundering operations the Southern District of New York had prosecuted in the preceding decade. The subject at the center of case file 6612 MN was a man named Emilio Rastrelli, 61 years old at the time of his arrest, a naturalized American citizen born in the municipality of Cali, Colombia, who had operated Oriente Metals and Exchange LLC on West 47th Street for nearly 14 years. The case file describes Rastrelli as a man known in the district as a serious dealer, punctual, meticulous, polite to customers and vendors alike. He held a registered dealer's license with the New York Department of Consumer and Worker Protection, paid his taxes on time, and carried a membership in the Jewelers Security Alliance. His fifth-floor suite held 2 safes, a certified gold testing bench, and a countercase of mounted stones kept more for appearances than for active trade. He moved through the district like a man with nothing to hide, and for the better part of 14 years, nothing in the public record suggested otherwise. The affidavit states that Rastrelli had been recruited into the laundering operation approximately 16 years prior to the investigation's opening, through a contact in the Colombian American business community in Flushing, Queens. The recruiting party, identified in sealed portions of the file as a logistics coordinator for a trafficking organization operating out of the port cities of the Colombian Pacific coast, had approached Rastrelli with a straightforward proposition: a reliable source of cash in large quantities needed to be converted into tangible, transportable, internationally fungible value, gold, in exchange for managing that conversion and maintaining the appearance of a legitimate precious metals business. Rastrelli would receive a commission of 4% on all funds processed. At the volumes the operation eventually reached, the affidavit notes that 4% represented personal earnings to Rastrelli in excess of $18 million over the life of the scheme. The mechanics of the laundering, as reconstructed from seized ledgers, wiretap logs, and surveillance records, worked in 3 distinct phases the investigating team came to refer to internally as the drop, the wash, and the forward. The drop phase involved the physical delivery of cash to Oriente Metals. Couriers, typically operating in groups of 2 to 4, arrived at the West 47th Street building on irregular schedules, sometimes weekly, sometimes with intervals of 3 or 4 weeks between deliveries, a deliberate variation intended to defeat pattern recognition by financial monitoring systems. Each courier carried cash in denominations of 20s and 50s, packed in sealed vacuum bags concealed inside ordinary luggage, or padded courier envelopes. The amounts per delivery ranged from roughly $80,000 to as much as $400,000. always structured to remain beneath the $10,000 currency transaction reporting threshold on any single documented exchange. The cash was drug proceeds, downstream revenue from distribution networks operating primarily in New York, New Jersey, and Philadelphia. The wiretap log for intercept number WL4417, dated March 3, 2022, records Rastrelli confirming receipt of, in his words, the usual delivery from the usual friends, and stating that he would have the account ready by Thursday. The wash phase was where the cash ceased to be cash. Rastrelli did not deposit the funds into any Oriente Metals bank account. Instead, he transferred structured amounts across a network of 11 purchasing accounts maintained at 4 separate commercial banks under the names of shell entities incorporated in Nevada and Wyoming, bearing names like Pacific Rim Commodities Group, Standard Alloy Partners, and Riviera Precious Metals Holdings. None of these entities had real employees or a real business. Their sole function was to generate paperwork. The case file exhibitors include photocopies of purchase invoices created by these shells to Oriente Metals, invoices describing scrap gold deliveries of specific weights at specific spot market prices that Rastrelli used to document the received cash as the legitimate proceeds of wholesale gold purchases. The affidavit states that every such invoice was fabricated in its entirety. No gold changed hands. The weight receipts were invented. The invoices generated on a computer template he had refined over years of practice, modified slightly with each generation to avoid a visually repetitive pattern. The forward phase completed the conversion. Rastrelli used a portion of the laundered funds, approximately 30 to 35% per the seized ledger, to purchase actual scrap gold from legitimate sources, estate sale lots, liquidating jewelry retailers, small dealers within the district. This real gold he accumulated until he had sufficient volume to justify a shipment, then moved it not to a domestic refiner, as his paperwork suggested, but through a freight forwarding company at JFK Airport to a refinery in the free trade zone of the canton of Zug, Switzerland. The Swiss entity, identified in the file as FR2, accepted the gold, processed it, and issued settlement payments into correspondent bank accounts in Panama, Luxembourg, and the United Arab Emirates, from which funds moved through nominee-held investment vehicles before reaching the organization's principals. The case file notes that FR2 also maintained a modest, legitimate refining business as cover, and that its principals were sophisticated enough to ensure its documentation was, in the words of the supervising HSI agent's affidavit, superficially impeccable. By the time the investigation was formally designated as Case File 6612MN and a joint task force convened, drawing in IRS Criminal Investigation, Homeland Security Investigations, the FBI's New York Field Office Financial Crime Squad, and prosecutors from the United States Attorney's Office for the Southern District of New York, the estimated total placed Oriente Metals' processed drug cash at somewhere between $280 million and $320 million over 9 years. The range reflects uncertainty in the earliest transactions, before the electronic records trail became sufficiently dense for reconstruction. The surveillance buildup occupied 16 months. The task force, under the case management of HSI Special Agent Thomas Venegas and FBI Supervisory Special Agent Catherine Orr, pursued the investigation along 4 parallel tracks. The financial audit track, led by IRS CI, reconstructed Rastrelli's complete transaction history across all 11 shell entities, 4 banking relationships, and the JFK Freight Forwarding Company through 47 grand jury subpoenas to institutions, freight companies, and registered agents in 5 states. The seized ledger, a spiral-bound notebook with entries in English and Spanish abbreviations, recovered from a locked drawer in Rastrelli's office during a search warrant execution in April 2022, was described by the examining forensic accountant as a near-complete operational record of every cash delivery received and every disbursement made from approximately January 2014 forward. The accountant's report, Exhibit 44B, runs to 212 pages. The communications intercept track involved court-authorized wiretaps on 4 telephone numbers associated with Rastrelli and 3 additional numbers linked to identified couriers and a coordinator designated Subject CC1. The logs document 49 conversations of evidentiary significance, discussions of delivery scheduling, complaints from Rastrelli that deliveries had been short 3 times in 1 month, a call in which the coordinator spoke of needing to slow down the river following heightened law enforcement activity in New Jersey, and a negotiation in which Rastrelli requested a higher commission rate, a request the file notes was denied. The physical surveillance track involved rotating teams from HSI and the FBI supported by pole cameras on West 47th Street and on the JFK Cargo Terminal Access Road. The logs document 14 courier delivery visits over the surveillance period, with photographic documentation of vehicles and courier identities, and in 3 cases, luggage identifications later matched to purchase records at a commercial retailer in Newark. The international coordination track involved mutual legal assistance treaty requests to Swiss and Panamanian authorities, and coordination with Emirati financial intelligence units through Treasury's Financial Crimes Enforcement Network. Swiss authorities responded within 43 days, providing records confirming 12 wire transfers from the Zug refinery's settlement accounts to the Panama correspondent chain, totaling $41 million in cleared funds. The Panamanian response, arriving 91 days later, confirmed account registrations and provided partial transaction records. By the spring of 2023, the task force had assembled what the supervising AUSA described in an internal memorandum as a prosecution package of unusual completeness. The indictment, filed under seal on April 14, 2023, charged Rastrelli with conspiracy to commit money laundering under 18 U.S.C. Section 1956, 3 counts of substantive money laundering, operating an unlicensed money transmitting business, conspiracy to defraud the United States, and 2 counts of filing false currency transaction reports. 4 co-defendants were named. The courier coordinator identified in open court as Frederick Milano Huertas, 47, of Flushing, Queens, courier principal Marcus Diaz, 39, of Newark, a third courier whose identity remained unresolved at filing, and Swiss refinery director Henrik Schleifer, 64, designated for parallel Swiss proceedings under a separate EMILAT referral. The takedown was executed on the morning of June 9, 2023, under the operational designation Operation Gilded River, in a coordinated action spanning 4 locations. At 6:04 in the morning, 8 HSI special agents and 4 FBI agents approached Rastrelli's apartment building on East 86th Street in Yorkville, Manhattan. The arrest was made without incident in the lobby, where Rastrelli was encountered near the elevator carrying a shoulder bag and a coffee mug, apparently preparing to leave for the district. He made no statements. He was transported to the Metropolitan Correctional Center for processing. Simultaneously at 6:07, a second arrest team of 6 HSI agents took Frederick Milano Huertas into custody on the 2nd floor landing of his Flushing, Queens apartment building. A search incident to his arrest recovered a prepaid mobile phone, a notebook with scheduling entries, and approximately $4,000 in cash. At 6:11, a third team executed a search warrant at the Oriente Metals offices. Agents recovered computers, backup hard drives, 4 gold testing instruments, the contents of both office safes, approximately $62,000 in cash, and 4,100 grams of scrap gold, and the physical ledger central to the financial reconstruction. A USB drive in a desk drawer held blank invoice templates that forensic examination confirmed had been used to generate more than 300 fabricated purchase records. Marcus Diaz was arrested at his Newark residence at 6:15. A search of his Ford Transit van recovered a vacuum-sealed bag containing scrap gold residue consistent with courier deliveries, and a commercial luggage scale of the type used to pre-weigh cash packages. Henrik Schleifer was taken into custody by Swiss federal authorities in Zug on the same morning, timed to fall within a 3-hour coordination window. Swiss prosecutors announced his arrest and the seizure of refinery records later that day. A concurrent freeze order covered 4 bank accounts holding approximately $9.3 million. The post-arrest period produced several evidentiary developments of note. Frederick Milano Huertas agreed to cooperate following a proffer session, a approximately 6 weeks after his arrest, providing testimony that confirmed and extended the task force's understanding of the organization's structure, including details about a previously unidentified principal designated in the file as UP1, located outside the United States. That information led to a supplemental sealed filing in the Southern District in August 2023 and a coordination request with the Drug Enforcement Administration's Special Operations Division. The current disposition of that supplemental filing is not reflected in the declassified portions of this record. Marcus Diaz did not cooperate and proceeded to trial. A jury returned a guilty verdict on all counts after 4 days of deliberation in February 2024. His sentencing in April 2024 resulted in 112 months in federal prison, followed by 3 years of supervised release. Emilio Rastrelli entered a guilty plea on October 7, 2023, to the conspiracy to commit money laundering count and to operating an unlicensed money transmitting business. He agreed to forfeiture of all scheme-associated assets, the West 47th Street business, his Yorkville apartment, a vacation property in Palm Beach County, and various investment accounts, totaling approximately $12.4 million. His sentencing in March 2024 produced a term of 151 months in federal prison, followed by 3 years of supervised release. The government's memorandum cited the duration of the scheme, the scale of proceeds, and the deliberate integration of the operation into a legitimate commercial district, lending drug money the reputational cover of an established and trusted marketplace. Frederick Milano Huertas was sentenced in May 2024 to 63 months, a reduction reflecting the assistance his testimony provided. The sentencing judge acknowledged the government's recommendation, while stating that the cooperation did not diminish the seriousness of Milano Huertas's role in moving hundreds of millions of dollars in narcotics proceeds through what he termed from the bench, the deliberate exploitation of a market built on trust and on the legitimacy of the American jewelry trade. Henrik Schleifer's parallel Swiss proceedings, per the final addendum dated September 2024, resulted in conviction by the Swiss Federal Criminal Court on charges of aggravated money laundering and participation in a criminal organization. He received a custodial sentence of 4 years and 2 months. Swiss authorities confirmed final forfeiture of the $9.3 million frozen at arrest and indicated additional civil recovery proceedings were ongoing. The total value of assets seized and forfeited across all jurisdictions reached $47.8 million. The total estimated to have been laundered through the scheme over its 9 documented years was assessed by IRS Criminal Investigation forensic accountants at approximately $294 million, a figure the case file notes carries a margin of uncertainty of plus or minus 9% owing to incomplete documentation of the earliest operational period. The case file closes with an analytical note attached as Exhibit 92A. It observes that the Oriente metal scheme was distinguished from simpler trade-based laundering operations by the sophistication with which Rastrelli embedded it within a genuinely functioning commercial context. Unlike schemes built around purely fictitious businesses, Oriente Metals was a real participant in the Diamond District. Real customers, real vendor relationships, real gold moving through real freight channels, real trade association memberships. The shell invoice layer was built around a core of actual commercial activity because that core of authenticity made the fabrications harder to detect and the overall pattern harder to distinguish from legitimate high-volume precious metals trading. The task force note states that disentangling genuine from fabricated transaction records within a single entity's books required the development of a custom reconciliation framework by the IRS CI forensic accounting team, a framework the task force recommends for adoption as a standardized tool in future precious metals laundering investigations. The final notation in the case file is a single line, initialed by the AUSA of record, dated October 2024. It reads, "All defendants sentenced, all forfeiture orders final, matter closed for primary prosecution purposes. Supplemental file 6612 MNS remains active. Federal case file 6612 MN. Status declassified."